Hi, everyone. I'm Sharif Asif. I'm joined today by my colleagues, Karen Taylor and Anthony Brown. All of us are members of the Global Asset Management Transfer Pricing Network here at KPMG. And today we just want to briefly summarize some typical but tricky transfer pricing issues that we come across in the asset management industry and some important considerations that we need to keep in mind when addressing those issues. So with that, Karen, maybe you can start off by giving us a general summary of what those common intercompany arrangements are.
Sure thing. Key components of a group's value chain will need to be analyzed from a transfer pricing perspective, where those functions, assets, or risks are contributing to a benefit received by another group entity. Key intercompany services we often analyze in the asset management context include the provision of investment management services, advisory, sub-advisory, research, trading, and capital raising functions. And possible methods we use in a transfer pricing context to validate the arm's length nature of those intercompany relationships, they could include fee splits, commissions, profit splits, and cost plus in the occasions where those services are more routine in nature. Which service we use from a transfer pricing context to test the arm's length nature really comes down to the relative value of each function and the degree of integration between them.
Yeah, we see a variety of operating models in this industry, and establishing the optimal transfer pricing policies is especially tricky in asset management because those operating models, those business models tend to change more rapidly than in most other industries. So if you look at the past few years, for instance, as an example, the role of technology in asset management has really evolved. It used to be more of a back office sort of function where it was more in support, but now more and more you see technology as a key value driver in this industry. The distribution function has changed significantly. Again, more digitalization there, new distribution channels. All of these things and other factors have a real impact on the optimal transfer pricing policies that can be supported. So maybe Anthony will bring you into this. What are you seeing along these lines from your perspective?
Yeah, Sharif, I think one of the other aspects we're seeing is that, for example, we see robo-advisors with a lower investment management fee structure, which can then really impact the analysis as to how to reward the functions, assets, and risks across the value chain as compared to the more traditional investment management models. With that, I think we'll move on and touch briefly on intercompany financing. Now, in terms of intercompany financing, while there can be related party loans between investment management companies for working capital purposes or other, the larger transactions tend to be related to the funding of alternative investments by way of either shareholder debt or debt pushdowns in acquisition structures. So, two key points on this. Point one, it's important not only to consider benchmarking the interest rate, but also to evidence debt capacity in the borrower for the amount of the debt and how they will repay or refinance the debt at maturity. And this can be especially important for debt into the US, especially given the Section 385 regs. Point two, monitoring is also very important. Don't set and forget the transaction. Many loans can have prepayment rights, which may be present and should be monitored, and also could have covenants that may be applicable. And again, these should be monitored to evidence that the lender and the borrower are protecting their respective interests.
Yeah, we do a lot of work in intercompany financing, so that's a topic to keep in mind. I want to just take a step back for a second and just maybe note that transfer pricing, we have to remember, is not just a tax issue in this industry. It's also something that's drawing a lot of scrutiny from financial regulators. So, for example, the SEC here in the US, with its focus on private fund cost and fee allocations. In Europe, you've got the MiFID II regime, focused there on unbundling costs for certain basic asset management type of functions. So we have to really aim a lot of our work at the financial regulators as well, not just the tax authorities. But the tax authorities, of course, remain our prime concern. Karen, if you want to go over that a little bit.
So we're really seeing two key trends in the controversy space in the asset management sector. The first relates to what we call mancos, so management companies that could potentially earn a slice of the overall returns of the asset manager. we're seeing those challenged more and more, particularly where they lack economic substance relative to the occasionally high percentage of profit that those mancos might earn. The second area of challenge we're seeing a lot right now relates to what Anthony was referring to in the context of intercompany financing. So we're seeing occasions where intercompany financing in the context of an investment might get challenged either because of debt capacity points or because that interest rate applied on that intercompany financing is not supported by adequate transfer pricing analysis.
Just to add, I mean, what we tend to see is a lot of differences in opinion between our clients and tax authorities in relation to either the arm's length range and how that's been established, or quite often the point in the arm's length range in terms of, for example, an investment management fee split. We're also seeing challenges to allocation keys where a residual profit or fee split is used. And these obviously cause more controversy and challenges that need to be dealt with and recognized by our clients.
Absolutely. We wanted to keep this short, so we'll sort of wrap it up here. And that's just a quick flyby, if you will, of some high-level asset management transfer pricing issues. Thank you, Kieran. Thank you, Anthony, for joining me today. And please don't hesitate to reach out to any of us for a more in-depth discussion of any of these issues or other issues you may be facing in this space. Thanks.